Once you go over one time and you play in that casino, you're never going back to the old one. And that's what the digital economy is, and that's what the network effects are. The network effects will allow wallets to be open easier. And once the wallet's open and your money's in there, I've asked people the same question. Hey, the money you've brought into crypto or the digital economy, have you ever brought it back? No. Nobody ever brings it back.
No.
And that's why I keep saying it's like, you can have two casinos, you can be gambling in both, but at some point when the other one's all old and rotted and it's just not fun, you just move over to the one that's young and shiny and everything's better. And maybe it takes everyone dying before the money moves over and you hand it to the kids and they're already over there, but it's happening.
Jordi Visser illustrates this through a vivid analogy. Two casinos across the street from each other. The old casino represents traditional finance, familiar but decaying. Across the street stands a shiny digital casino, sleek, efficient, and connected. Once users cross over, they don't go back. This is how the digital economy absorbs capital, quietly, permanently, and exponentially. Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space, and drop your comments and observations in the comment section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks, and enjoy the video.
So Circle IPO'd, and it rockets up in value, and everyone's like, what the fuck? How can a money market fund business essentially be trading at this? And I'm like, I've seen this before, and I'm like, there's one of two answers. Either it's a massive bubble in Circle and every retail wants to buy it and everyone's got it wrong, or none of us understand, but this is a network stock. Because as we know, Metcalfe's law values things very differently. Most things are network stocks nowadays. And then we saw that announcement yesterday. They've got like a gazillion partners building on top of a network. I'm like, well, there you go. Because everybody tries to value this stuff via cash flows, and it's the wrong way of doing it.
I mean, you hit on the important thing, and one thing I said this year, so I did believe stablecoin would be the big thing this year. I'm very surprised Bitcoin's only up, whatever it is, 18% year to date, but stablecoins have been the reality check for everyone in understanding, and it was because of the network effects. You can actually grow, and the visual or the analogy I've tried to give to people is, let's assume there's two casinos right across the street from them. One of them is this old, rotted down one, but it's the one you go to all the time, and it's the one you're familiar with. You know everyone in the place, and you're a boomer going into that casino, and that casino has most of the money. And then across the street is this very shiny casino, brand new, you don't know anyone though, so it's scary. But once you go over one time and you play in that casino, you're never going back to the old one. And that's what the digital economy is, and that's what the network effects are. The network effects will allow wallets to be open easier. And once the wallet's open and your money's in there, I've asked people the same question. Hey, the money you've brought into crypto or the digital economy, have you ever brought it back? No. Nobody ever brings it back.
No.
And that's why I keep saying it's like, you can have two casinos, you can be gambling in both, but at some point when the other one's all old and rotted and it's just not fun, you just move over to the one that's young and shiny and everything's better. And maybe it takes everyone dying before the money moves over and you hand it to the kids and they're already over there, but it's happening. And I think what Circle and all of these things are is they're getting more financial volume going through this system. And once more money is in there, we're not going to get to talk about this way, but this is another macro thing we could have talked about, and I don't know what your view is on this. I was very interested to see what happened with Malay this weekend. And the reason was...
Yeah, how did you read that?
Well, the way I read it was this. It was a very interesting thing that the administration basically said, we'll give you $20 billion. They're trying to impact the election. They're trying to get the voters to go, that you have the U.S. help. Now, if it didn't work out, everyone who is a local is going to take their money and put it into dollar stablecoins. So the money's coming back in the U.S. Either way, the U.S. wins in this. So by using the swap, and I believe 100% that this is the mindset now. It's one of the reasons why I think the big sellers in Bitcoin are absolutely out of China. I think it's Bitcoin miners. I think it's family offices that are in mining. I think it's people that have held a lot of this stuff because I think China's cracking down on this whole situation. It's been part of it. And even though the crackdown's been happening, I don't think enough people are realizing the flow dynamic that's going to happen with stablecoins. Stablecoins allow for what I didn't see when I lived in Brazil, which is there was a black market, but it was very difficult to get your money outside the country. With stablecoins, any individual that's worried about the depreciation of the peso can take it out in a second. So we learned that with Silicon Valley Bank. I don't know why people didn't think about what could happen in Argentina. Very similar to Silicon Valley Bank, because a bank in the US, which took in all of this money, it was all evaporated in a matter of 48 hours. And the reason was because of the version of stablecoins, meaning it was digital money that was able to be taken out very quickly. The same thing will happen at some point with an emerging market country where someone loses, and you're going to have a run on the country, and it's going to happen at some point. And you've seen the ECB and China both publicly talk about the fact that they're worried about the dollar stablecoin situation. They don't know how to handle it. China wants their own CBDC. They want their own digital yuan. But the problem is, I think for these countries, it's going to be an issue. So that's the reason why I think Argentina was an interesting test case. He won. It didn't go out. But you give money to get the votes, and if it doesn't happen, the money's going to come right back into America. It's a little surprising that the market cap hasn't grown faster, but I think some of that has to do with clarity not being done yet. I think clarity is a big event. When that occurs, and with the timing of everything that's gone on, you're already seeing all these, JP Morgan allows collateral, Citi, that everyone is kind of already starting to think about how the guardrails will be, and they have to compete. They have no choice. And today in the market, Fiserv was down huge. It was down 40%. This fintech company. And I immediately go into an LLM and go, what is their stablecoin plan? And it said in there, well, their stablecoin plan is as of June 23rd, 2025. And I'm like, okay, did they have one before that? And they didn't. And so the reality is if you haven't had a stablecoin plan for the last at least few years, that's what made Stripe very important October of last year when they went out and bought Bridge. That was
and Visa had the plan,
exactly.
MasterCard, they're all there.
They're all there already. The banks are trying to catch up, but I think the financial guardrails are changing. Tokenization is really the most important part as the next step, and I don't think people have fully grasped the tokenization side, how important it is. They don't want solar. The reality is, like you said, it's a race. We have to get it done. And when you realize the shortage we have in transformers and in gas turbines, you have no choice but to go another route. And the solar route is going to be part of it. The battery route is going to be part of it. When you start getting lithium investments, that's them pretty much admitting that, okay, we need batteries. And it's not just for drones and it's not just for humanoids and defense weapons. It's also for, okay, there's a reason why Elon Musk, when he built Colossus, he's got his big battery packs. There's a reason why his battery part of his side is growing. This also brings the Bitcoin miners in because of the grid optimization, because what the Bitcoin miners are able to do, and this has been something that I learned more about this year, and this is actually an important thing for people to hear because I do think it'll bring the traditional finance world. Every day there's a new way for them to invest in crypto. You obviously had the Circle IPO. So stablecoins have finally, people didn't even hear of stablecoins a year ago.
That's another one I need to talk to you about. I'm sorry, I keep writing notes of things I need to talk about.
So that got in there. But the Bitcoin miners are another place. And the reason is because they're directly connected to AI. They've built out these data centers. They have this equipment. And in the case of Texas, they have 4 gigawatts of the 80, I think it's about 85 to 88. So it's a sizable portion. Now, the value that they bring to the ERCOT to Texas is the fact that if you have solar, obviously at nighttime, they're not producing anything. So what is important is that the prices, even during the lower times, are higher during the off times. And this is what the Bitcoin miners do because they're arbitragers. So they do things when the price is really low. So it's kind of like having a restaurant where you're closed at night. Well, if you could have orders at night when the tables are empty, then your business is more profitable. So what the Bitcoin miners do is they act as virtual batteries. And so if ERCOT's having a problem like it had in 2022 and pipes are freezing and the electrical prices are going through the roof, then they can call the Bitcoin miners and they won't mine anymore. And so the miners have become important. And the reason that is in there is that more and more people are looking at grid optimization, no matter where they are. And this was a big negative because Bitcoin miners were negative on the ESG side. In fact, everyone, when I got into the Bitcoin side, is like, oh my God, this is so inefficient. And so everyone is starting to connect. So I do think when you go through the power side, people have to look at so many places across the power side. We're going to be using batteries. We're going to be using solar. We're going to be using boilers. We're going to be using generators. We're going to be using everything because, like you said, it's a necessity. And the gas turbine shortage, of which there's, I think, 4 or 5 companies that make gas turbines of any kind of size in the world. If there's a shortage there, that's 5 companies that are not supplying the power. They're holding things up. And so a small boiler company, a small battery company, nuclear like investments. This is kind of the PMI thing. Those dollars start kind of moving around into other places, and solar is definitely going to be one of them.
Then comes a powerful insight. Bitcoin miners are no longer just crypto participants. They're becoming critical players in global energy infrastructure. In Texas, for instance, Bitcoin miners manage around 4 gigawatts of capacity, roughly 5% of ERCOT's total. These miners act as virtual batteries, turning off when the grid is overloaded and consuming energy when there's excess supply.
And you just see the scale of which China's doing it and the signal in that. They're not going to destroy capital for the sake of it. There's a race to get energy. The energy thing is also misunderstood by people. People say, well, solar's rubbish because as soon as the sun goes down, you got 4 hours of battery life, then it's all over, it's shit. Okay, what I say is, okay, grid can supply this much electricity. If you try and plug the hyperscalers into the grid is finished, right? Electricity prices go to the moon, it doesn't work.
Yep.
So you take as much off grid as possible, so they're only calling for 25% of their needs on grid.
Yep.
I mean, that's how it works. But people just look at everything in isolation because for some bizarre reason, solar is politicized. And they're like, solar bad, oil good. I'm like, fuck, it's just energy. And the entire game the world is in is intelligence per unit of energy. That's the game we're in now. The whole world is in one game.
Yeah, one of the things, you said an important point there, and I think people have to, they have to recognize that as of now, what the hyperscalers have effectively used was excess capacity on the grid.
Yeah.
We had, if we have a recession, which we have outside of the hyperscalers, they were just using what would have been used by,
manufacturers.
If the commercial buildings are empty, then they're not using them. If you can't have the nominal GDP slow down outside of digital and not have electricity usage go down. So where the electricity usage is going up is geared towards the LLMs and towards training them. So once you get, and I think next year is the forecast that most people have, where we will then be at full capacity, that's where the build out becomes critical. So I think one of the reasons that this hasn't been, violent, when you go to 3 Mile Island, when you go make all these deals, when Elon Musk imports basically a gas plant from overseas, it's because he can't get through things here. And whether it's the state regulations, which have become an issue, or other things, I think people will have to recognize that when you go through excess capacity, again, you start to get the PMIs go higher. PMIs at the end of the day are about a diffusion index. And if you have excess capacity and you're not running, at a full throttle situation, it becomes an issue. And I think that's where we're going to be at. The other thing on batteries, just so people know, I'm spending a lot more time on the edge problem. The reason I brought up the humanoids is kind of the level where I think the stock market, when people jump into humanoids, because right now most investors are like, it doesn't matter. I'm like, no, it's starting next year. And this is my hot take for here. The first humanoids in full development will definitely happen next year. It's the Tesla robotaxi, which is really humanoids on wheels. And that will open up people to do the homework. And the reason that's so important is because we're going to start getting into the brain being in the devices, the edge devices. So everyone has to realize that.
Elon's even talked about using all of the yesterday, which is, I think, I don't know, maybe you and I have talked about in the past, that they've all got latent computing in all of these cars.
Yeah.
There's millions of these damn things. You just need to connect them, which he happens to own the network. Oh, what a surprise.
Well, this is the reason why you probably last week or 2 weeks ago, Andre Karpathy had a podcast come out with Dwarkesh Patel.
Yeah.
And I got a bunch of things sent to me going, oh, this must mean he's saying no AGI till 2035. I guess we have a bubble right now. I'm like, okay, first of all, it's kind of like the recession thing. It depends on how you define it. We're actually in a recession right now in many parts of the economy. He's saying AGI is when the computers in the brain are interacting with the world like a human, which I happen to agree with. If you ask me what is not AGI, it's when a computer can do a bunch of knowledge work, but that's it. It needs to interact.
Yeah, well, I don't even know, because if we'd gone back 3 years and said where we are today, we would say, yeah, that's AGI.
Oh, yeah.
We've got agents acting autonomously. Sure. We've got memory, but we just keep moving AGI because when we have AGI, we're declaring ourselves not the apex species. Nobody's going to declare it because nobody wants to. But that's the fact, is the moment we announce it, we have replaced ourselves with a new apex species, which has never happened to all of humanity.
Correct. Correct. And again, the robo-taxis can already drive better than humans. Yes. I do believe that the interaction between a humanoid and human beings, it's not there yet. I mean, they can do stuff. They'll be in mines, they'll be in factories, they'll be in all of this stuff. But before they go into a house with kids, they actually need to improve a lot. And that was his point. And whether or not it happens, in the future or not, but the reality is we will be sticking these brains inside these devices that don't have time to wait for the latency to go to the cloud and come back down. And that's the whole point of we're entering a different stage. And for batteries and power, it has huge implications. There's also the semi side where it was one semiconductor that was benefiting from the data center build out. And the reason I use NVIDIA, so NVIDIA is the data center side. It's the oil. It's whatever you want to do of this thing. But now you're getting into every semiconductor going higher, like Micron and SK Hynix, and extending into the smaller ones. And the reason is because when you make brains inside an edge device, that is different than a data center. They need different packaging. They need all this stuff to happen. And so I think that's going to be the next phase of AI, is that brain part and the battery part.
Circle's IPO, stablecoins, tokenization, Bitcoin miners, AI grids, and humanoids. These aren't separate stories. They're chapters in the same narrative, the birth of the networked economy. We're witnessing a complete rewiring of civilization, where money flows digitally, power is optimized intelligently, and machines begin to think independently. Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space, and drop your comments and observations in the comment section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks, and enjoy the video.